Hey, Mike Swanson. We're going to give you a quick update today on the stock market. In fact, I'm going to talk about three stocks that I own that pay big dividends that are beating the market. Those are the situations that I think are going to be the winning situations of 2023. We're in a different market environment than we were before 2022. What's being rewarded in this market are companies with products in the real world that people use that have stable revenues or growing revenues. This is not an era of zero rates, which helps hype take off. And concept stocks fail, and crypto coins become useless in this market environment. So today, the averages are down, but whenever there's a down day, there's an opportunity to learn from that to see where the pockets of strength are in the financial markets. And we're in a global financial system. So we can see that European markets are up, even with our markets down. Japan down a little bit, but most of the rest of Asia doing okay. We can also see gold and silver up. So as we've been seeing for over a year now, really gold is more stable than the stock market. Gold has been outperforming in the stock market since New Year's of 2022, and it's still doing that. What about crypto? Crypto down 1%. Just get a tiny drop in the S&P, and crypto gets smashed. Crypto's useless in this market environment because it's not beating the market averages. To beat the market, you want to be in sectors, asset classes, stocks that are beating the market averages. That's the key to winning. And as I said, it's dividend paying stocks with stable or growing revenues that are typically doing that now this year. So the headline today, dominating everything, which is hurting the Nasdaq because Google heavily weights the Nasdaq, is that Alphabet is dumping. Google stock is dumping today, down 8%. That's a giant drop for one day and a stock with this big of a market cap. And what has happened is, as the headline shows, traders are selling the news of AI. You were told over the past 3 weeks that this chat AI thing is just going to take over the world. This is the next big thing, and the hype is endless on this. But the reality is, when it comes to what the stocks are saying, stocks are dumping on this news. The hype is not pushing the stocks up because hype is no longer enough to fuel sustainable, real gains in stocks. Very difficult to make money in penny stocks, crypto coins, forget about it. Maybe they go up a day or two, but it's not like a sustainable rally. You got to have real trades, real investments. And we saw this with Facebook 2 years ago when they talked about the metaverse, ran ads about the metaverse, and we were told that the metaverse was the greatest thing and everyone's going to use it. Businesses are going to use it for conferences. Everyone's going to get like addicted to it. What happened? No one's using it. It turned out investigative reporters found out that the people actually developing it and the goggles don't even like using it because it makes them sick. It was all hype, and Facebook was one of the worst performing stocks period in the financial markets last year. I think it was the worst performing stock in the entire Nasdaq 100. One of them is a complete disaster. We should learn from that. That hype, if it doesn't mean anything, it is earnings growth that means something. So what did Meta do? It had to reinvent itself once again in order to get the stock to just jump and squeeze some shorts. What did they do? They said, we're cutting costs. We're not focusing on, we're now focused on cutting costs, and doing a $50 billion share buyback. That caught the short scrambling last week. They cut, and then stock went up. Now, Google is going to eventually have to do something similar to that because, as you can see, what did the stock do? It just ticked up a little bit in AI hype, but now it's selling all the hype. The hype is useless. So what I want you to notice, though, which is more important for decision making going forward, is the indicator on the bottom of this chart, which is a relative strength ratio, taking the price of Google divided by the price of the S&P 500. When that ratio goes up, it would mean that Google stock is outperforming S&P 500 stock. When that ratio is going down, the opposite's happening. That's important because laggard stocks, which is what's going on when that goes down, they tend to crash when the stock market just pulls back and then fail to go up as much as the market does when the market rallies. So that, and they're prone to bad news and collapses and risky situations. They are the opposite of what you want to be doing. To beat the market, you want to be in stocks beating the market. So frankly, if I own Google, I would be selling. I would be selling Google in order to put that money into something beating the market. Now, to show you, I was going to show you 3, but I'll show you 4. A stock I own that is beating the market, NVIDIA. And NVIDIA is a tech stock. It is soaring. So you can see that it's been doing pretty good over the past couple of weeks on this chart. It's above the December high, above the August high, cleared the 200-day moving average. But it's not vastly overbeating the market. This has just been going up since November. There's other stocks that have a much stronger trend of beating the market. So I'm not telling you go buy NVIDIA right now. In fact, when we look at the market averages, as I talked about Sunday, I think we're in a sideways pause at the moment. We had a big run in everything. And things got overbought. The stochastics above 80, RSI touching 70 in a lot of markets, a lot of sectors, and typically you get a breather. And I think that's what we're really going through right now. So I don't think you can wait before you buy something. Let chart patterns consolidate and line up for the next couple weeks for a good entry point. But you can look at I own the ETF for Germany, and it got overbought. This isn't updating. It should be EWG divided by SPY on the bottom. So you can see vastly outperforming the market there since October. And that's what you want, vastly outperforming the market. And this looks like it's taking a breather. So let me talk about some of these stocks I own. 3 of the stocks I own. One is Fidelity National Financial. Financials are doing great this year. The higher interest rates are helping to boost the earnings of financial companies. And this company is beating the market. It's been beating the market since August, and it's paying a 4% dividend, and the trend is up. This stock was 37, now it's 44. That's a nice return. Then you get the 4% dividend on top. Another great bank, global bank, is Barclays. And it's outperforming the market and paying a 4.5% dividend. It is now pausing. It appears to me to be consolidating, which lines it up for a good entry point. It's a British bank, so it benefits when the U.S. dollar is a little bit weaker for American investors. They get the currency gain when the pound goes up relative to the dollar. So I like this stock a lot. I would much rather be buying this stock, frankly, than Google. Let me show you NVIDIA. The relative strength wasn't updated yet. Now you more clearly see how relative strength is outperforming. Has been doing it since October and since August. And the last stock I want to tell you about, which you probably have never heard of, is the Hooker Furniture Company. This is a furniture company whose headquarters is just 30 minutes away from my house. And it is vastly outperforming the market. It's paying a roughly 4.2% dividend. This stock was $13, now it's $21. It's a real life furniture company selling furniture to people all over the United States. It's got a market cap of around $300 million, paying a beefy dividend. And I bring this up because this stock has gone up much more on a percentage basis than Google since October, and it's paying a bigger dividend. These are the kind of situations you can find in the market. So if you think, the gateway to making money is hype, I must buy AI, I must buy crypto coins because this lunatic on YouTube or Twitter or Instagram or TikTok is telling me crypto is going to 100,000. They were telling you that 2 years ago too. And what are you left if you believe that a year ago? You're left holding the bag. No, you don't need to buy into hype to make real gains in this market. You can buy into stocks like this, and you see how this has gone up just as much as Google has. No AI. This is no hype. This is something has revenue right now. It doesn't have to change its business plan and reinvent itself. and do all these risky business moves to do well. It's already doing well, and the dividend is stable. The people are good. Find situations like that. There's got to be companies where you live, just regional companies that I may not know about, that have stable earnings, paying dividends, whose stock is trading above the 200-day moving average. Invest in those situations, and you do much better than the person that's got their Robinhood app and buying all these crypto coins and trying to get rich. No, you can make sustainable gains and get the dividends at the same time, and that adds up and can compound itself. And that's how you build wealth. That's how you beat the market, by getting in stocks that are beating the market. The game is as simple as that. Hype, hype, hype. Ignore it, ignore it, ignore it. Go for stability in these markets. That's the key to winning in 2023, because we're not going back to the gambling type world before 2022. Rates are not going back down to zero. It takes 0% rates for there to be large numbers of people that can't get any yield, can't put money in bonds, can't do anything safe in their accounts. And they tell them, oh, I got to become a gambler now to make anything. No, people with serious money aren't doing that anymore. Really, it's just a few people left playing that type of game, and they're getting taken to the woodshed again and again and again. If you've been in that situation, just get away from the hype. Go on your YouTube channel and just delete all these people on it that told you nonsense, and forget about them. As simple as that. Move on. Delete your Robinhood app. Open up a real brokerage account. I just did that last week, deleting the app because I don't use it. I've got real brokerage accounts. I opened up the app a couple years ago just to see what it was about and track what other people are doing in it, but it's a waste of time. And I don't want to keep getting these silly tax statements from them every single year. Forget about the app. There's brokers that got free commissions that provide more stuff than they do. And it's just a waste of time. So anyway, if you like this video, hit the like button. If you want to get my next video, hit the subscribe button on YouTube, then hit the bell next to the subscribe button, and YouTube will send you an alert as soon as that next video is up. And I'll be talking